LLC, limited liability company. A lot of people have probably heard of them. They have some pretty big advantages. An LLC, first of all, the first question when starting an LLC is how many people are going to be in it. If there is only one person in the LLC, that's fine. It's called a single member LLC. And the real big advantage to an LLC is it gives you that liability protection. So if you have the lawn mowing company and God forbid you do some damage to property or you hurt someone or something unfortunate happens and you're an LLC, if you follow all the rules of the LLC, if you were sued or if something happened, in theory, they cannot take more than the value of your company. Okay. Whereas a sole proprietor, like I said, they could go after you personally, after your bank account, after other assets that you may own. So that's one of the large advantages. If you're a single member LLC, which means you're the only owner of that business, the tax filings are identical as far as the form goes to a sole proprietor. You're still going to file on your personal tax return. You're still going to file something called the Schedule C, and you would basically do the same type of forms and very similar computations that you would as a sole proprietor. Now, if you had multiple owners of an LLC, you would file a slightly different tax return. It's a little bit more involved, but it again would be what a partnership would frequently file. It's called a Form 1065. What that does, just to give you a very basic illustration, is let's pretend that you're in the lawn mowing business and you have two people that own this company. And let's say that they make taxable income of $20,000 and you're each 50-50 owners. They would spit out a separate tax return where they would show that your business made $20,000. Then they would give you a form called a K1 form to each owner. And it would say owner number one, we'll call him Jim, made $10,000, and owner number two, we'll call her Sarah, made $10,000. That $10,000 would then flow into your 1040 tax return, and you would pay income tax on that also as a personal tax return.